This is a quick real estate update from Jerry Metcalf Partners, real estate agents on the ground in Atlanta. We're talking about what it's like, what to expect, the pros, the cons, and what to consider to align yourself and your loved ones for the best opportunities. Okay, now we're recording. All right, everybody, it's the JM Partners Atlanta Home Market East Drop. And today we are going to talk about mortgages. We kind of take for granted or think we all know what locking your rate is and means. So we brought Kevin Dwyer with South State, who is an exceptional lender from Atlanta, been working with us for years. Clients keep raving about him and how informative he is. So we thought we'd just bring him on and share with us. Kevin, thanks for coming on.
Hey, thanks for having me. Everybody's looking great this morning.
Everybody, Jack, say hi. Adam's here with us, and we got Bridget here with us today.
Morning. What's up, everyone?
Hi, Kevin.
How are you?
Glad you're here.
So, yeah, good to have him here, right? So we're going to talk about, it's funny, y'all, we've been going live, but I just have to say today we are like live for real. Anyway, 3 things to know about locking your mortgage rate. Number 1, Kevin's going to tell us about okay, locking your mortgage. What is that really? Because a lot of people think they know, or we think they know, and they don't, and we don't. Number 2, what you might need to know or want to know about timing and the different parameters around that. And number 3 is actually about lower might not be better, which a lot of people might have just turned off this podcast interview right now saying, no, lower is always better. So we're going to talk a little bit about that. So Kevin, get us started with what is locking your rate? Locking your rate.
Yeah. So that is basically your commitment that you are buying that particular interest rate or telling your lender, you know what, I want that rate, I want that pricing, and it's locked for a period of time. So it is your commitment with that particular lender based off of the pricing of that day for that interest rate that you're getting.
So once you do that, your closing is going to be 30 or 45 days later. How long is your lock? Getting into timing. Yeah.
So the kind of standard pricing goes anywhere from 15 days up to 90 days on a rate lock. And what's important to know about that is that you want to make sure that your closing date is happening within that time frame. So, the market in mortgage pricing can change on a daily basis. And so you want to make sure that if you're closing in 30 days, your lock covers that period. So you don't have to worry about paying extension fees or anything along those lines.
I had a question on that, Kevin. Speaking of that specifically, I think many buyers and sellers aren't that clued in when it comes to the extended rate lock. So I think on a 90-day, there is such a thing as a buy down or float down. Do you want to speak to that quick?
Yeah. So the increments that they go every 15 days for most lenders on the rate lock. So the longer you lock, the more expensive it is because it's more exposure basically that the lender or bank has with that interest rate lock out in the market. So if you're looking at a 30-day rate lock, it might cost you, say, a quarter discount point or a half discount point to lock it for 90 days. Okay. And then if you lock it for 90 days, you will generally have the option between then and when you close for a one-time float down option because you've locked it for a longer period of time. So if you locked it and the market came down a good bit, say 15, 20 days from when you're closing, most lenders will give you the option of having a float down with that rate lock you did 65, 70 days ago.
That's good to know. Thank you.
Absolutely.
To know too, when we're in contracts, working terms on contracts, and it's relevant to getting approved for the loan, what the interest rate is when we're going to close, and knowing those parameters to put together terms, especially in a strong market, on what our flexibility is to almost work like a cash buyer when there are assumptions that we can't. Adam, you had a question before we started recording about this.
Well, yeah, I mean, I had a question the other day, or when we were talking last time about what we can, not necessarily how a lower rate is necessarily better in certain situations. And why is that? Because I think everyone's going out there right now, they're fighting, they're like, I want the lowest rate, shopping around, putting all the lenders together to try to put them competitive against each other, but that's not necessarily always the best thing to do. And maybe some help explaining that.
Yeah. I mean, because everybody, it's just almost, it's almost a bragging right at a cocktail party, right? Or when we used to do cocktail parties, to say like, ooh, I've got a 1% rate. But what you paid for that rate is something that you might not want to put the bumper sticker on your back of your car with. But so I think what's important to know with that, and this kind of gets into the whole conversation with your mortgage advisor, is just like, what are your actual financial goals, right? So just recently I had a client that had like a $500,000 mortgage, and he was like, I want 2.5%. I want 2.5%, but it was going to cost him more money to get 2.5%. And he said, I'm only going to be here for 5 years. And it was, so I said, well, look at 2.75, and actually you'll get a lender credit with that instead of paying points. And I said, it's only $42 difference a month. I go, you'll save $7,000 in 5 years by actually taking a higher rate. And he was like, what? And so it's important to know that, yeah, a low rate can be great, but what you pay for that rate compared to an alternative rate might not be great for your financial situation there.
Well, that comes into the time value of money, what you could do with that money now, besides the fact that it's more money now. Jack, you had some great questions earlier about rates, and a little bit, we may go down a rabbit hole, so we'll keep it brief, but really on what we've been talking a little bit about it, but getting a little bit into what really determines rates. I know, Kevin, you'd said they can change. A lot of us assume that they're kind of stable, they're not really doing that much, but they can change day to day. But Jack, kind of go into that with some of your question too.
Yeah, we just talked about some of the key indicators like the CPI, Consumer Price Index, just kind of the market, how when people are jumping into the stock market, that's not necessarily good for rates, for mortgage-backed securities and all that good stuff. So yeah, just talking to that and how people can maybe pick up on that, maybe have some foresight and not reacting and, being kind of left in the dust per se.
Yeah. And it's in because I send out to my clients that are out in the market. I actually send them some of the tools that I use so they can actually see, just specifically with mortgage-backed securities, because everybody's like, oh, I follow the 10-year treasury and the rate should be doing this. So they're every week, every month, there's economic indicators like you mentioned that come out that kind of give us a barometer of what's happening in the market, right? How is inflation doing? How is consumer sentiment? How are the retail sales, which is how, people out spending money in the economy? And all of that goes into how the bond market's doing and not how the stock market's doing for the most part. So that all those pieces that come out, and that's what sometimes people don't realize. I might tell you a rate and a fee a week ago. If a lot happened in the market within that last week, that rate and fee could be totally different. So it's important for people to know, like, this does change daily. In a normal market, it's not, super, super volatile, but like when we had things happen last year with this coronavirus, we saw rates move a full point within 24 hours. So it went from like,
Kevin, tell us a little bit about, you were just about to say, but like the inverse relation of the stock market to interest rates, or bonds and interest rates, CPI and interest rates, what CPI is. Just, I know we're going to be quick, but that'll help everybody listening to this really get a grasp on what we're talking about.
Yeah. So, I mean,
we're giving us one example of an interest rate that went from something to something during coronavirus. Maybe start with that and then elaborate for us.
Yeah. Well, so, I mean, what drives it is what Jack had hit upon, which is like, if you're putting your money into the bonds, that will typically have a better impact for mortgage rates. When the investors start jumping out of the bonds, that ends up having a negative impact on the mortgage rates from that standpoint. So what happened when coronavirus hit is that all the markets were in kind of haywire, right? Nobody knew what was going on. It felt like the world was shutting down. And so we saw in a mortgage rate, a typical thing at that time was 3.5%. It went to 4.5% within like a 24-hour period. And the impact that has.
Was that because people jumped into the stock market? That's why you saw that, or was it
the gloves at that time, the gloves were off, right? Because I mean, you had people just pulling money out of everything, right?
Right.
That was and it luckily it all settled back down. And then since then, you know, we've seen interest rates go from say 3.75 down to where we are today of almost, you know, 2.75. So that was kind of, but if you were in the midst of buying a house right in that time, I mean, it could have changed on you like that from a rate standpoint.
It was just a risk thing. It went up because the risk was high, and it went up because, and then banks were just pulling out, like, never mind, we're not doing jumbos anymore. So it changed. Right. It was like everything supply and demand, simple supply and demand.
Yeah.
Awesome. Thanks, everybody. So in review, today we were talking about mortgage rates, what they are, what locking your mortgage rate really is, and number one, I'm reading over here, guys, but locking, for those of you who are watching today, but locking your mortgage rate, timing, what to consider. There are a lot of things about timing that are really relevant, not just to your mortgage, but to your transaction and buying a home. And then last but not least, what do you mean lower is not better? Final thoughts.
So it's Valentine's Day weekend. I want to ask y'all a question, since y'all just asked me so many questions about the market on an early Friday morning. Favorite sappy romance movie? Go ahead.
Oh,
Jack, go.
Are you serious?
Yeah.
Oh, man.
That's all you got.
Wait, I know Jerry's.
I've got one.
Yeah, you start, Jerry. I'm not good with these.
I'll start because this is dark. Y'all, people are gonna be like, this girl is crazy, and I can't undo this. It's live. But for whatever reason, this movie always comes to mind though. Pulp Fiction. That's not romantic. But it has its own like twist of fate, right?
That is one of my most favorite love story movies.
I do love Pulp Fiction.
Seriously, I do love Pulp Fiction. I love Quentin Tarantino.
Nothing says.
Somebody do better.
I figured you were going to say Hit.
The Titanic's a good movie.
I thought you were going to go with Hit.
Too sappy.
Hate me like one of your French girls, Jack. Come on.
He asked for sappy. If Chad were on here, it'd be Hitch, or it's Adam.
Hitch. Hitch is it.
I said
Hitch.
I didn't heard Bridget. I'm like, oh my God. Okay, keep going. Hitch is it.
See, the movie gets going. Adam, you didn't come up with one?
Hitch was our team movie. We watched Hitch as a team. Not even kidding.
Best life.
We did
romance.
Watch the team.
I love
best business advice ever on that. It's the best.
That has to go down. I've never heard of a romance movie. That's just like, I've never heard of Pulp Fiction. It's like, hey, what's your favorite love story movie? Silence of the Lambs. You know, when Clarice, I just feel like that's one of the most best love stories when they get to talk at the end.
Is that the equivalent of saying Die Hard to Christmas?
There were some moments in there. Yeah. I don't even remember the end. I just wanted a chance to talk about the movie.
Okay, that's too dark.
There's
a show called Clarice.
Now, Silence of the Lambs, that's way too dark. I can't watch that stuff. No.
It's a great love story. Watch it over the weekend with your hubby or maybe another.
What's yours, Kevin? What's yours?
Oh gosh. You know what? You know what's a fantastic one I haven't seen? Crazy Stupid Love with Steve Carell.
That sounds too sappy.
That's a good one.
Not watching it. I don't even like the stuff.
I'm
gonna Google Steve Carell.
It's not even sappy.
Steve Carell.
Ryan Gosling.
Sarah Marshall.
Ryan Gosling's in it.
That's a good sappy love.
I've got a good one.
Kevin.
Huh?
Wait, go ahead. 40-year-old version.
You gotta love it.
That's a good one.
Nobody likes my romantic movie, 40-year-old version.
That's a romantic movie. Go with it.
That's also great for sales, by the way. Great for just ask questions. That was a big. Do you guys not remember? Did you not watch it?
40-year-old version.
Yes, we've watched it.
40-year-old version. Great sales. Great sales advice in that one too. Huh. Trying to like win all these women and like just stop and ask questions. Just ask questions.
I mean,
and they've got the same ask questions.
The movie Knocked Up. Great. Another great.
Oh God.
That's a good one.
That sounds like a horror film, actually. I say that as someone with 2 children who loves them like more than anything.
That is great.
Phenomenal in that movie.
Is it really? What's so great about it?
It's a good movie.
It ends up.
It's called Knocked Up.
Yeah, you haven't seen it?
No.
Gotta get Jerry watching some more. She doesn't watch the sappy movies. She doesn't watch the
I
chick
like
flick.
40-Year-Old Virgin, Hitch, and yeah, it's sappy. Like if
Come on,
I like
Tim.
pause, off, delete. What's
It's a
that?
little bit of a chick flick.
Kind of the same.
Next team trip, we'll
All
do
right,
a
what-
legit chick flick. How about that?
There we go. We have it. Is there Nick Hitch is a chick flick? I'm pretty sure. What
It is.
Yeah,
Is there another
that-
question?
It should be a guy flick. That's the best guy advice ever on that movie.
There's like Chad,
Dude, we
you
should
take,
just go
take a
silent.
note.
No, we can hear you.
I can't hear y'all. Can you hear me?
I've got it.
Yep.
Of course.
Yeah.
Who wants to close this out? Oh, there you go. I can hear you now. All right, Kevin, why don't you close it out?
Want me to close it out? Like do a prayer,
Yeah.
or what do you want me to do?
Yeah. Say happy Valentine's Day. Bye. Bye, y'all.
Bye, y'all. Happy Valentine's Day.
So thanks, everybody. Subscribe to this show. If you like what you hear, you want to keep up to date on the Atlanta market or have any friends that do. Thanks again for joining us, Kevin. Thanks, Jack.
Thanks for having
Thanks,
me.
Adam. Thanks, Bridget.
Thanks,
Have a
Kevin.
great weekend.
All right. Bye, everybody.
Thank you for listening to the J & Partners Atlanta Market Eavesdrop. If you like what you heard, please subscribe and share with your friends who might be moving or who just want to keep up with the latest on the Atlanta residential market. You can find us anytime online at jnpartners.io. That's jnpartners.io.